Hello everyone, welcome back. Today we are going to do question number 7 of your textbook. Here is the question. Prepare final accounts from the trial balance and adjustments of Pankaj as on 31st March 2015. Here you can see in the question first capital and drawings. Balances of capital and drawings are given. Then purchase and amount of purchase and sales are given. Then purchase return, sales return, stock, carriage inward, salary, wages. All these amounts are given. So first we will prepare trading account, then profit and loss account, and after then balance sheet. Before starting the sum, let us read adjustment first. First adjustment, closing stock of rupees 1,65,000, out of which market value of 50% of stock is 10% more and market value of remaining goods is 10% less. Second adjustment, unrecorded credit purchase is rupees 60,000. Then unrecorded credit purchase return is rupees 7,500. Then unrecorded credit sales is rupees 75,000. Then unrecorded sales return is rupees 22,500. Then outstanding wages are given. Outstanding wages is given, that is 15,000. Then goods of rupees 15,000 destroyed by fire and insurance company accepted a claim of whole amount. Then next adjustment, goods of rupees 7,500 withdrawn for personal use. Labor charges for installation machinery rupees 7,500 wrongly debited to labor charges. So here trading account will be prepared first. First we will write heading, trading account of Shri Pankaj for the year ending on 31st March 2015. Then after then, profit and loss account will be prepared. Here it is. First we will write heading, profit and loss account of Shri Pankaj for the year ending on 31st March 2015. After then, balance sheet will be prepared. Here it is. Here we will write heading, balance sheet of Shri Pankaj as on 31st March 2015. We know that balance sheet consists of two components. On the left hand side, we will show liabilities, and on the right hand side, we will show all the assets. So let us see next. Now let us see the prerequisites you should take before you solve problem. So first and foremost step is read the question carefully, give good amount of time on this, try to analyze properly, don't be in rush, try to interpret the question correctly, and while reading you can mark and highlight important items which are required adjustments. By marking these items we will not miss out any adjustment or also get an idea as to how much lines we are supposed to leave for each adjustment. So let's get started. So here our first adjustment is about closing stock, and second adjustment is unrecorded credit purchase. So here it will have effect on purchase. So we will mark it here, purchase, and its second effect will be on creditors. So mark it here so that we can get an idea as to how much lines we are supposed to leave. Then we have credit purchase return. Again, it will have effect on purchase and on creditors. Then we have unrecorded credit sales. Here we have effect on sales and debtors. Then we have unrecorded credit sales return. Again, we have its two effect on first on sales and second on debtors. Then sixth adjustment is about outstanding wages. So mark wages here. It will have effect on wages. And second effect we will record it on liability side. Then next is then we have eighth adjustment. Here it is given that goods of rupees 7500 withdrawn for personal use. So here it will affect purchase, and second it will affect drawings. So mark drawing. Then we have ninth adjustment, that is labor charges for installation of machine. Rupees 7500 wrongly debited to labor charges. So it will have effect on wages. So mark wages here, and a second effect will be on machinery. So here we will mark machinery. So in this way we have to mark. Now here we have already prepared the necessary accounts. Now after that we will post all the entries from the trial balance. Now here first one is capital. Here we will show capital in liability side of balance sheet. Here it is 6 lakh. Then we have drawings, rupees 18,000. Here we will show it in balance sheet. We will deduct it from capital. Then we have purchases. Here we will write the amount which is shown on debit side. Purchase has debit balance, we know that. So this is 9 lakh. We will show purchase in trading account on debit side, as we have already studied that. Purchases means purchase of goods and materials for the purpose of resale or to be used in production. And purchase account always has a debit balance. It includes both cash and credit purchases. So here we will show it on debit side of trading account. Here it is, purchases. We will show it in inner column, rupees 9 lakh, because we have related adjustment. Then next we have sales. Sales will be shown on credit side of trading account. Here it is, rupees 15 lakh. We will show it in inner column, as again we have related adjustment. So we will show it in inner column. Now next we have purchase return. So purchase return will be deducted from purchase. So here we will deduct it, rupees 30,000. Now next we have sales return. Sales return will be deducted from sales, rupees 60,000. Then we have stock. Date is given, that is 1st April 2014. That means it is opening stock. Opening stock means closing stock of the previous year, which has been entered in the opening stock account through an opening entry. So here we will show it in debit side of trading account. Then we have carriage inward. Carriage inward, as it is purchase related expense, so it will be shown in debit side of trading account. Here it is 15,000. Then we have salary. Now salary will be shown on debit side of profit and loss account, as it is an indirect expense. Indirect expenses are those expenses which are not directly associated with manufacturing of goods. So here we will show it in debit side of profit and loss account. Amount is rupees 1,80,000. So must remember that all direct expenses will be shown in the debit side of trading account, and all indirect expenses will be shown on debit side of profit and loss account. Now, next is wages. So here, wages is a direct expense, as wages is the amount which is given to the laborers who are directly involved in manufacturing process, production process. So it is a direct expense, so it will be shown on debit side of trading account. Here it is. We will show it in inner column as we have related adjustment regarding this. Then we have office expenses. Office expense is an indirect expense, and it will come under the heading administrative expenses. And as it is an indirect expense, so it will be shown on debit side of profit and loss account. Here it is, rupees 1,20,000. Then we have debenture interest received. It is an income for the firm, so it will be recorded on credit side of profit and loss account. Here it is, by debenture interest received, amount is rupees 15,000. Then we have discount received. It is also an income, so it will be recorded on credit side of profit and loss account. Amount is rupees 6,000. Commission received. It is also an income, so it will be recorded on credit side of profit and loss account. Amount is rupees 3,000. Then we have 10% bank loan. Amount is rupees 3 lakh. 10% bank loan is a long-term liability, so we will record it on liability side of balance sheet under the heading non-current liabilities. Amount is rupees 3 lakh. Then we have bills payable. Bills payable is current liability. We will show it in balance sheet on liability side. Amount is rupees 22,500. Then we have debtors. Debtor is current asset. We will show it in asset side of balance sheet. In the inner column, amount is rupees 1,35,000. We have related adjustment, so we will show it in inner column. Then bills receivable is there. Amount is rupees 45,000. It is current asset. We will record it on asset side of balance sheet. Then we have creditors. Creditors is current liability. We will show it in liability side of balance sheet. In the inner column, we have adjustment regarding this. Then outstanding rent is there. Outstanding rent is also current liability, so we will record it in liability side of balance sheet under the heading current liability. Then we have advertisement expense. Advertisement expense is an indirect expense, so we will show it in debit side of profit and loss account, and we will show it under the heading selling and distribution expenses, because it is an expense related to sales of we make advertisement expense to increase the sale, so it will be categorized under the heading selling and distribution expense. Now next we have stationery and printing expenses. Again, stationery and printing expense is an indirect expense, so we will record it on debit side of profit and loss account. Here it is, amount is rupees 9,000 under the heading administrative expenses. Then we have machinery. Machinery is machinery is a fixed asset, so we will show it in the asset side under the heading fixed asset. Amount is rupees 1,35,000. We will show it in inner column because we have adjustment regarding this. Now next we have building. Building is also a fixed asset, so we will show it on asset side of balance sheet. Amount is rupees 4,50,000. We will show it directly in the outer column as we don't have any adjustment regarding building. Now furniture is there. Amount is rupees 90,000. It is a fixed asset. Then next item is rent. Now rent, indirect expense, Here it is. We will show it in debit side of profit and loss account. Amount is rupees 18,000. Now, next item is investment in 10% debenture. As it is an investment, so we will record it in the asset side. Then next we have bank loan interest. Bank loan interest is rupees 30,000. Here bank loan interest, we will show it in debit side of profit and loss account, as it is an indirect expense and it is related to we will show it under the heading financial expense. So here it is to interest on bank loan, amount is rupees 30,000. Now, after posting all the entries from the trial balance, let us give the effect of adjustment. So let us start with the first one. Don't forget that every adjustment has 2 or more effects, right? So let us see first adjustment. First adjustment is about closing stock. Closing stock of rupees 1,65,000, out of which market value of 50% of stock is 10% more and market value of remaining goods is 10% less. First, let us see calculation. We know that the goods remaining unsold at the year end is closing stock. Since closing stock is known only at the end of the year, it is not included in trial balance. It is given outside the trial balance in the form of additional information. Closing stock is valued at cost or market price, whichever is lower. So let us see here calculation. Here it is given that closing stock of 1,65,000, out of which market value of 50% of stock is 10% more. So 50% of 1,65,000 is 82,500 and market value of this much portion is 10% more. That means 82,500 plus 10%, that is 8,250 is equal to 90,750. So market values market value of this much portion is 90,750 and market value of remaining goods is 10% less. That means 82,500 minus 10%, that is 8,250. So if we deduct it, we will get 74,250. So here market value is a market value of 82,500 portion is 74,250. So since we have to take lower value, so here's 74,250 is lower value and in other 50% portion 82,500 is lower value. So here 82,500 plus 74,250, that comes to 1,56,750. So our value of closing stock is 1,56,750. This is very important adjustments. Since it is stock, so first effect will be credit side of trading account. Here it is, closing stock 1,56,750, and its second effect will be on the asset side of balance sheet, as stock is an asset to the firm. Here it is, closing stock of goods 1,56,750. We will show it under the heading current asset. Closing stock will appear on the asset side of the balance sheet in both the cases. That means when it is shown in trial balance and when it is shown outside the trial balance. But it is shown in the trading account credit side when its adjustment is shown outside the trial balance. Now let us see next adjustment. Next is given unrecorded credit purchase rupees 60,000. Since it is unrecorded credit purchase, so here we will add it to purchase, which is shown on debit side of trading account. Here it is, unrecorded credit purchase 60,000, and as it is unrecorded credit purchase, so here our creditor will also increase. So in balance sheet, here we will show in under the heading current liability, creditor is there, 1,02,000, and here we will add unrecorded purchase 60,000. Now third adjustment is about unrecorded credit purchase return, amount is rupees 7,500. Since it is unrecorded credit purchase return, it will reduce the balance of creditors. Since we don't have to pay to our creditors now, we are returning goods. So here we will deduct it from creditors 7,500, and by adding unrecorded credit purchase and by deducting unrecorded credit purchase return, here in the outer column we will get final amount of creditor, that is 1,54,500. Now its second effect will be shown in trading account. We will deduct it from purchase. So here let us see, amount is rupees 7,500. We will show it as a deduction from purchase. Now let us see next. Our next adjustment is about unrecorded credit sales. Amount is rupees 75,000. Here we will add it to sales. Here it is, amount is 75,000 unrecorded sales, and since it is unrecorded credit sales, so its second effect will be on debtor. It will increase the amount of debtors. So let us see. Here it is, debtors is given 1,35,000, and if we add unrecorded sales, that is 75,000. Now our next adjustment is about unrecorded credit sales return, that is 22,500. Since it is debtors has returned goods to us, so here it will reduce the amount of debtors, and by adding unrecorded sales and by deducting unrecorded sales return, we will get final amount of debtor, that is 1,87,500. Now let us see its second effect. Yes, unrecorded credit sales return. Here we will show it as deduction from sale. Here it is, 22,500. Now by adding unrecorded sales, that is 75,000, and by deducting sales return, that is given in the question, 60,000, and by deducting unrecorded sales return, we will get final amount of sales, that is 14,92,500. Now let us see next. Now next adjustment is about outstanding wages, rupees 15,000. Here this expense belongs to current year, but it is unpaid. So let's check the effect now. It will be added to wages on debit side of trading account, as it is current year expense which is unpaid. So we need to show it in current year financial statement. Here it is, 15,000. Now its second effect, let us see, will be on its second effect will be on the liability side of balance sheet to show a true fair view of the balance sheet. Hope it is easy for you to understand. Here it is, outstanding wages, amount is rupees 15,000. Now let us see next adjustment, seventh number. Goods of rupees 15,000 destroyed by fire, and insurance company accepted a claim of whole amount. So here we will show it on asset side of balance sheet. It is under the heading current asset. Amount is rupees 15,000. For its second effect, here we will deduct it from purchase. It is goods burnt by fire. Amount is rupees 15,000. Remember that goods going out other than sales will be deducted from purchase. Must remember that. Now let us see next adjustment, number 8. Goods of rupees 7,500 withdrawn for personal use. I just explained you goods going out other than sales will be deducted from purchase. So here also we will deduct it from purchase. Amount is rupees 7,500. And now since it is goods withdrawn for personal use, that means it is drawings. So here we will add it to the drawings that is given in the trial balance. Amount is 18,000 and here the amount is 7,500. So our total drawings is 25,500. Now let us see next one. Last adjustment, labor charges for installation of machinery rupees 7,500 wrongly debited to labor charges. See, this is an expense incurred on the purchase of an asset. And we have already studied that all expenses incurred on the purchase of an asset increase the cost of the asset and is debited to the particular asset account and not to expense account. So here we will add it to machine. Here machine, the amount of machine is given 1,35,000 and wages for installment of machine is 7,500. We will add it. So here our final amount of machinery is 1,42,500. Now let us see its second effect. As it is a capital expenditure which is wrongly debited to labor charges. So in order to rectify it, we will deduct it from wages. So here our final amount of wages 67,500. Now here we have given the effects of all the adjustment. Now it's time to close the account. First we will close trading account. Here in trading account, the total of credit side of trading account is more than that of debit side. The balance amount here is called as gross profit, which is 5,76,750, and it will be transferred to credit side of profit and loss account. Here total of credit side is more, which will be written on both the sides, that is 16,49,250. Now here we will show gross profit, and we will transfer gross profit on the credit side of profit and loss account. Here it is 5,76,750. Now we will close profit and loss account. If the total of credit side of profit and loss account is more, which is 6,750, which will be written on both the sides. So if the total of credit side of profit and loss account is more than that of debit side, it is a credit balance and called net profit. Here it is 1,68,750. Net profit is added in the capital of the proprietor. Hence, the capital of the owner will be increased by net profit. So let us see. So here in balance sheet, in liability side, we will add net profit to capital. Here it is 1,68,750. Now, by adding net profit and by deducting drawings, here we will get final amount of capital, that is 7,43,250, which will be written in outer column. Now, finally, your balance sheet will get tallied by rupees 12,36,750. So in this way, we have to show the effects of adjustments. We have to post entries from trial balance. I hope it is clear to you all. That's all for today. Thank you very much.